Okay, let's unravel the mystery of the credit score. Think of it as the trust meter of your financial life. Lenders and even landlords use it to decide whether to approve you for a loan or even rent you an apartment. So how do you make sure it's saying, "Trust me, I've got this"? Let's break it down. Your credit score is like a financial report card. It's a number between 300 and 850 that shows how responsible you've been with money. And that little number can carry a lot of weight. A higher score can mean lower payments on car loans and mortgages, easier approvals for rentals, and credit cards with better rewards. In short, a high score can save you thousands of dollars over time. There are 5 deciding factors that make up your credit score, and each of them carries a different weight. Number 1, payment history. This is the heavyweight champion. Always, and I mean always, make your payments on time. Late payments are the fastest way to see your score take a nosedive. Number 2, credit utilization, or your amount owed. This measures the percentage of your available credit that you're using. Borrow too much and it looks risky. Borrow too little and you may not build a credit history at all. Aim to keep your balances at or below 30% of your available limit. And if you can keep it below 10%, that's golden. Number 3, length of credit. The longer you've had credit, the better. Think of it as your trust timeline. And remember to leave old accounts open because they help to show consistency. Number 4, types of credit. A healthy mix of revolving accounts like credit cards and installment accounts like auto loans or student loans shows lenders that you're responsible with different money tools. And number 5, new credit. Opening a bunch of new accounts quickly can look risky and hurt your score. So take it slow and only apply when it makes sense. Step 1, start building. If you're new to credit, start small. A secured card or a student credit card work great. Use them regularly and make your payments on time. Step 2, pay more than the minimum. Carrying balances costs you money and lowers your score. Pay off as much as you can each month, ideally the full balance. Step 3, ask for credit line increases over time. This will lower your utilization ratio and could lower your score. Just don't take it as permission to overspend your budget. Step 4, don't close old accounts. Even if you don't use them often, the length of credit history helps. And step 5, review your credit score annually. You are entitled to 1 free credit report each year from all 3 major bureaus. Review it annually and make sure there are no discrepancies. Maybe your score is not where you want it to be, and that's okay. Improving credit takes time, consistency, and patience. But every on-time payment and balanced month moves you forward. If you're not sure where to start, schedule time with a trusted professional who can help you map out a plan. Your credit score is more than a number. It's your financial reputation. Treat it with care, nurture it with good habits, and it will open doors you didn't know were possible. Because building credit is more than increasing a score. It's about taking ownership of your financial story and building a foundation for your life. Because the goal isn't just to own a home, it's to own your future.